In today's show, according to Pantera Capital, Bitcoin is set to begin a meteoric bull run, but that Ethereum and certain altcoins will outperform the king of all cryptos. That's right, the crypto-focused venture firm Pantera Capital just released its latest outlook on Bitcoin and the overall crypto markets. In a note to investors, CEO Dan Morehead says he expects an ongoing tidal wave of money printing to boost Bitcoin as investors search for assets with the fixed supply, and their analysis shows Bitcoin targeting $150,000 by August of next year. In today's episode, I'll be breaking this down for you. Also, in today's show, billionaire Shamith P says he bought 1 million Bitcoin in 2013, back when it was only like $80 per Bitcoin. So could you imagine making a $80 million investment that turns into over $9 billion ROI? And he warns of Bitcoin success will spell global economic catastrophe. I'll be breaking this down for you here in today's show. Shamith P views Bitcoin as financial doomsday insurance. And yes, his first investment in Bitcoin was a purchase of 1 million Bitcoin back in 2013 when Bitcoin was valued at around $80. Today, that sum is worth more than $9 billion. I'll be breaking this down for you here in today's show. Also in today's episode, I'll be sharing 4 reasons why the Bitcoin price suddenly slid below 9,000, liquidating $55 million in positions. Also, we'll be taking a look at the overall crypto market. As we can see, Bitcoin and all the major altcoins are back in the red. So where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And before we kick off today's show, if interested in learning from the Wall Street legend himself, Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016, as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years. But it's not AI, the Internet of Things, or 5G. To discover what it is, click the link below this video in the description to watch this exclusive presentation by the one and only Teeka Tiwari. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. According to Pantera Capital, Bitcoin is set to begin a meteoric bull run, but Ethereum and certain altcoins will outperform Bitcoin. Let's break it down. The crypto-focused venture firm Pantera Capital just released its latest outlook on Bitcoin and the overall crypto markets. In a note to investors, CEO Dan Morehead says he expects an ongoing tidal wave of money printing to boost Bitcoin as investors search for assets with a fixed supply. Here's what he's quoted saying: "That tsunami of money will have a large impact on many things. In our markets, it seems inevitable that it will push up the price of fixed quantity things like Bitcoin. If there are trillions more paper dollars, the law of supply and demand implies much more paper money to buy the same amount of cryptocurrency." Pantera's analysis shows Bitcoin targeting $150,000 by August of next year. I repeat, Pantera's analysis shows the Bitcoin price targeting $150,000 by August of next year. If you're ready for a 6-digit Bitcoin valuation, let me know in the comments right down below. I know personally, I cannot wait. As for the altcoin market, Pantera co-chief investment officer Joey Krug points out a number of coins which have outperformed Bitcoin's 34% gains this year, including a 98% rise in 0x, which is ZRX, and a 97% surge in Augur, and an 88% jump in Ether. That's right. It's a trend that Pantera expects to continue in a new bull cycle. Here's what they're quoted saying: "During cryptocurrency bull markets, we expect assets outside of Bitcoin, altcoins or alts to outperform. And he goes on to share, historically, alts haven't outperformed until mid to late in the bull cycle. For instance, from January 1st, 2016 to December 31st, 2016, Bitcoin's share of the market dropped from 91% Bitcoin dominance to 87%, but by the end of 2017, it was down to 38%. How many of you remember those times back in December of 2017? It's currently sitting at about 65% BTC dominance. The implication here is that over time, we expect the performance gap between alts and Bitcoin to widen over the course of the next year, with alts outperforming. I also want to stress a lot of altcoins have been completely wrecked, losing 90, 95, even 99% of their value. If the altcoin in particular does not have a strong utility and use case, forget about it. You know what I mean? Because many of you are going to be investing into alts, looking for that big come up, only to find out your altcoins are worthless, because that will continue to happen. However, there are a handful of really good projects out there you should take a look at, and that's what he's referring to right here. According to Krug, another boom for initial coin offerings is unlikely to happen, and coins will need to prove their utility this time around. The firm's multi-currency hedge fund is currently outperforming Bitcoin by about 20%. And now, before we get to our next story of the day, with billionaire Shameth P saying he bought 1 million Bitcoin in 2013 and warns Bitcoin's success will spell global economic catastrophe. Let's first take a look at the overall crypto market. Bitcoin shed about $600 in the past 24 hours. We're back in the red, above that $9,100 support, but overall, the market lost a lot of liquidity. We can see Ethereum down 2.6%, trading at $232. I swear, the other day we were close to 250. XRP down 1%, trading at 18 cents. Chainlink, one of the few altcoins actually in the green today, up about 0.4%, trading at $4.74, making its way to $5. I've said this before, and I'll repeat it again. Personally, I feel Ethereum and Chainlink are amongst the most undervalued altcoins in the crypto market, but that's just my 2 Satoshis. And before we take a look at some of these top exchanges, let's get to our next story of the day. Now, could you imagine investing into 1 million Bitcoin back in 2013 when it was only valued at $80 and now having a $9 billion ROI come up? Well, for Shameth P, this is his reality. He views Bitcoin as financial doomsday insurance. I love that. The 43-year-old billionaire, venture capitalist, and chairman of spaceflight company Virgin Galactic said on the Unchained podcast that investors should apportion 1% of their portfolio to Bitcoin and hope it never pays off. And I'll share with you why he said that. I also want to stress that Paul Tudor Jones, considered one of the most influential investors of our time, just allocated between 1 to 3% of his overall portfolio, and we're talking hundreds of millions of dollars. So there's massive institutional demand occurring as we speak. So here's what Shameth P had to share. I just think that if people have been hardworking with their heads down, they should have an opportunity to make sure they don't get wiped out if the government itself continues to make a string of bad decisions that have rising consequences. You can say that again. And Bitcoin, to me, is the only thing I've seen so far that is really fundamentally uncorrelated to that decision-making process and to that decision-making body, because at the end of the day, any more asset class, equities, debt, real estate, commodities, they're all tightly coupled to the legislative framework and the interconnectedness of the financial markets that brings together many of the governments that are sort of behaving this way. And I agree 100%. I feel it's a hedge against the dwindling value of the dollar as they continue printing trillions in the name of quantitative easing. He goes on to share, and so it's almost like a bet against the ruling class in some ways, and making sure that you have a small amount of insurance. Insurance is something that pays off $1,000 to $1. You want these massive asymmetric payoffs because you want to be sure that a small amount of insurance can basically make you whole. And that's why I think you should take 1% of your portfolio, put it into Bitcoin, never look at it, and hope that that 1% goes to zero. So Shameth P recently made headlines criticizing the U.S. government's coronavirus bailout. More power to him. He called on lawmakers to let hedge funds and billionaires get wiped out instead. Wow. The venture capitalist notes that while Bitcoin is a good hedge against traditional assets, investing in the crypto is not a strategy that will pay off due to a single event or moment in time. Rather, he sees Bitcoin's success will rely on a sum of many bad decisions by the government. That's a pretty good bet. If you were to bet that the government will continue making very bad decisions, well, you're betting on Bitcoin then. An outcome, he says, no one should want to happen, and I can second that. He goes on to share, if your Bitcoin bet pays off, it will be cataclysmically destructive for the world, and they'll have enormous consequences to many people we all know and care about who weren't hedged in Bitcoin, and so you almost don't want it to happen. Shameth P doesn't really see any other path to Bitcoin success other than that complete financial breakdown. He believes there is much easier to use products that will serve as virtual payment mechanisms. He also says his first investment in Bitcoin was a purchase of 1 million BTC back in 2013 when the crypto was valued at around $80. Today, that sum is worth more than $9 billion. So take a look at this for a moment, please. He invested into Bitcoin back in 2013 when it was going for $80 per Bitcoin. He purchased 1 million Bitcoin, and today that fortune is worth over $9 billion. How do you like those apples? He goes on to share, there's a well-known person in the Bitcoin ecosystem. His name is Wenkis Caceres. Hopefully I'm pronouncing this correct. Please correct me if I'm wrong. He was the one that introduced it to me in 2010, and we were actually going to Las Vegas for his 40th birthday, and that's when he pitched me on it. And I remember landing 3 days later, and I called my family in office and said, buy 1 million Bitcoin. That's how I started. It was $80 or something at the time. It just sounded kind of really interesting. How many of you would have loved to made that investment, right? But then it took me a few years to really understand it. I didn't totally understand all of the mechanics of it. And to be honest with you, I've forgotten most of the mechanics now. I studied it. I made an underwriting decision to buy and to never think about it again. And by the large, I've never thought about it again. I remember my family office flipped when Bitcoin was at $20,000 per coin. They were like, and I was like, guys, don't tell me. I don't want to know. Just take it off the balance sheet. Don't ever look at it. Keep it at cost and don't get psychologically affected by this number. Pretty cool investment, to say the least. I know the Winklevoss twins are also Bitcoin billionaires, considered to be the first. Well, Shameth P is another. Much respect and more power to him. Now, before we get to our next story of the day, and I share 4 reasons why the Bitcoin price suddenly slid below 9K, liquidating 55 million in Bitcoin and crypto assets. But first, let's take a look at the top exchange volume. We have Hobby Global, which surpassed Binance, up 42% for the day with 5.5 billion in volume. Binance number 2 for the day, up 21% with 5.5 billion in volume. OKEX up 13% with 2.9 billion in volume, and BitMEX up 2% with $2 billion in volume. All right, now for our next story of the day. The price of Bitcoin dropped below 9K from 9,660 within 7 hours. The 7% plunge comes as $55 million worth of long futures contracts were liquidated on BitMEX. 4 factors are likely behind the sudden decline in the price of the top crypto by market cap, namely stocks sliding, selling pressure from miners, an extended period of low volatility, and repeated rejection of that critical $10,000 psychological resistance. And we can see this massive fall off, which just occurred yesterday. This was also a bad day for stocks, not just Bitcoin. Stocks futures opened slightly higher Wednesday evening after a sharp sell-off during the regular market session, with the Dow dropping 2.72%, its worst day in 2 weeks. As regularly reported, Bitcoin and cryptos dropping with global markets has been a common theme in the recent months. The realized one-year correlation between Bitcoin and the S&P 500, for instance, has spiked during this time to nearly 40%. As pointed out by analyst Phil Philb last Friday, from a technical standpoint view, the market remains overall bullish despite consolidating below resistance at $10,000. However, he warned that shorter-term price action remains largely at the mercy of wider economy, particularly while Bitcoin consolidates on low volume. Next, miners are selling Bitcoin. Various data points from Glassnode, which is the Bitcoin analytics firm, and CryptoQuant and ByteTree indicate miners are selling Bitcoin en masse. According to researchers from Glassnode, the largest inflow of Bitcoin to exchanges was observed on June 24th. Glassnode went on to share, yesterday we observed the largest flow of Bitcoin from miners to exchanges in over a year. This was primarily due to large miner transfers to Bitfinex totaling 2,650 Bitcoin. When miners start to sell their Bitcoin reserves, specifically after a key difficulty adjustment, it can leave the Bitcoin exchange market vulnerable to a short-term pullback, which is exactly what we're witnessing. Previously, Willy Woo, shout out to Willy Woo, explained that miners account for one of the two types of unmatched selling pressure for Bitcoin. Willy Woo wrote, there's only two unmatched selling pressures on the market. Number one, miners will dilute the supply and sell onto the market, and this is hidden tax via monetary inflation. And number two, the exchanges who tax the traders and sell onto the market. So if miners sell tens of millions of dollars worth of Bitcoin when volatility has been low for weeks, it can trigger a massive price movement in a short period of time. Traders expected the price of Bitcoin to see an abrupt increase in volatility in the short term since mid-June. Bitcoin showed lackluster price movements in the past month. We can say that again. It's been quite a boring market, to say the least. While the open interest of futures exchanges continue to increase, that means a growing number of investors have anticipated Bitcoin to move, but the uncertainty between buyers and sellers at a pivotal point caused volatility to remain low, as we can see here in this chart from SKU Analytics, showing you the Bitcoin/USD realized volatility. Now, data provider SKU said the realized volatility of Bitcoin dropped to 30%, the lowest so far this year. Hence, the resulting lull finally ended for the first time since the last break from low volatility on June 12th. Next, repeated rejection of that critical $10,000 psychological resistance, but traders remain optimistic. The price of Bitcoin has ranged between $10,000 and $6,000 for most of the time in the past 10 months. The three consecutive rejections of the 10,000 price level since October 2019 led Bitcoin to see a pivotal triple top, which would materialize if Bitcoin falls below $8,000 in the near term. Again, that can materialize if Bitcoin falls below 8,000 in the near term. We're currently sitting right at about 9,200. And at the same time, many traders remain optimistic for multiple reasons. Crypto trader Satoshi Flipper, what a name, right? For example, believes that even if Bitcoin drops to the 7,000s in the second half of 2020, Bitcoin is on track to test 14,000, which was last year's high. He said, there's an excellent chance we dip into the 8Ks. Even 7K is on our way to test 14K. That path doesn't make me any less bullish than if we went straight up from here. I still think we'll test 14,000 before the end of the year. It really all depends on stocks. Now, a confluence of fundamental factors, including the current correlation with stocks, the unexpected selling of minor reserves, may weaken the short-term trend of Bitcoin, but over the long term, however, analysts generally anticipate a positive trend heading into the year's end. As I do, I personally feel will retest not only last year's high of 14,000, but the all-time high set back in December of 2017 of $20,000 to the moon from here to the moon, my friend. And now taking a look at the overall crypto market cap, we're sitting at $261 billion with 72 billion in volume in the past 24 hours, and the current BTC dominance is 64.4%. And now taking a look at the top gainers within the top 100, we have Quant leading the pack up 15%, trading at $8.31. Flexicoin up 8%, trading at 0.003. Ren up 3.7%, trading at 16.7 cents. Celsius up 2.9%, trading at 30 cents. BitShares up 2.4%, trading at 2.5 cents. And Matic Network up 2%, trading at 2.2 cents. And now taking a look at the biggest losers within the top 100. Seal down 18%, trading at 8 cents. Swiss Borg down 9.5%, trading at 12.7 cents. Aave down 7%, trading at 13.5 cents. Sia Coin down almost 6%, trading at 0.002. Verge down 5%, trading at 0.006. And Loopring down 5%, trading at 7 cents. And as we continue scrolling down, you can see the majority of the coins within the top 100 are currently in the red, as there's definitely a bearish sentiment in the market right now. Which altcoins are you most bullish on? Let me know in the comments right down below. And now taking a look at the BitMEX margins, we can see the bears are still in control, leading with about 73 million in superiority in the last 24 hours, with shorts leading 51.9% versus 48 100% longs. Are you currently bullish or bearish on the king of all cryptos? Let me know in the comments right down below. And now taking a look at one of my favorite indicators, it's the Crypto Greed and Fear Index. Shows we're currently rated a 43 in fear. Yesterday was even with 50, which is neutral. Last week a 40 in fear, and last month a 39 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. And I want to encourage you to check out the description right below this video by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 460 plus videos right here on my channel. I also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every single day, it also allows you to download the latest episode of the show in MP3 format. Also, be sure to subscribe on YouTube if you haven't yet already done so. Smash that subscribe button, or to go to the direct link, it's cryptonewsalerts.net. Also, I appreciate your continued support on all the major podcasting platforms, including Apple's iTunes, Spotify, Google Play, Stitcher Radio. So whichever podcasting platform you're active on, once again, I appreciate your continued support. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, as I am, I do have a crypto Facebook group entitled Crypto Alchemy with over 17,000 strong from all over the world. To become a part of this, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a crypto Telegram chat as well. To become a part of this, simply click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto revolution. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And real quick before I go, if interested in learning from the Wall Street legend himself, Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is, click the link below this video in the description. It's going to take you to this page to watch this exclusive presentation by the one and only Teeka Tiwari. Enjoy it, and I look forward to catching you in tomorrow's episode. Peace.